Hey everyone, Danny Greco here, and today I want to talk about something that's become topically relevant, and that's a discussion on mortgage interest rates. We just recently, as close as the end of July, saw the Federal Reserve announce that they were going to cut the federal funding rate by 0.25%, and this is the first time the Fed has done so in roughly, I believe it's about 10 years. So what I want to clear up on is confusion regarding the Federal Reserve cutting interest rates and the result, if any, that has on mortgage interest rates. Now keep in mind, the Federal Reserve does not have a direct relationship in regard to mortgage rates. When they're talking about cutting interest rates, they're referring to short-term credit. These are things like personal loans, car loans, student loans, maybe anything else that's a short-term type loan. This does not include your 30-year mortgage-backed securities. So when you hear the Fed has cut interest rates, that does not mean they have cut mortgage interest rates, because it's two different types of credit ratings there. So, however, that's not to say it doesn't have an impact on mortgage rates, but if the Fed cuts rates, there's usually not any immediate knee-jerk reaction the mortgage bond market has on that action, because that has been anticipated. That move has been anticipated by the mortgage rate makers for months. And as we saw in this case, there really wasn't any difference. That anticipation of a 0.25-point rate cut had been anticipated by the market. So for months, that lower rate has been offered to consumers in anticipation of that. Now, what was a little different was the comments made by the Federal Reserve were a little more pessimistic, I guess, than what many had thought. Maybe thinking a rate cut at the next meeting might be more possible, or maybe even a larger rate cut than what many are expecting. So that sort of threw the markets a little bit of a curveball, and you started to see stocks trend lower, which usually means rates are going to trend lower as well. Now, we'll get into this in another video as well, but then what really sent the markets tumbling was, of course, the trade war. But in this video, I really just want to get across the notion that forget what you hear or what you associate in regard to the Federal Reserve and mortgage rates. They're not connected. They're talking about two different things, and the mortgage market and the market in itself is usually almost always going to be ahead of whatever action the Federal Reserve takes, because they're more anticipatory than they are reactionary. So anyway, I'm going to get into another video explaining the most recent rate cut and or I should say the more current interest rates, and why it's such a great time to be either refinancing or purchasing a new home.